All right, good morning, everybody. My name is Alexander, and today is the 8th of July 2021, and this is my catch-up series for today. A recap from last week, gold was around here, where I was saying I was only going to be a buyer with a break of this level. We see that break 1, 2, and a run into this level. For the overall trend is still bearish, so I'll only look to take my sell entry with a break of this higher low. So if I see that break of that higher low, I'll be a seller back to the downside. But for now, it's still on the bullish retracement. AUDUSD was around here that day where I was saying we might see that rejection. We saw that push back down, but a break of this level, and I was a buyer up into this level, and you could see how it fared after it broke that level. It went back into this zone where I said we were expecting it to run into. For now, it's back into the selling market. So we are still bearish overall. We want to see this market run into this level. I did not capitalize on this sell, but if I were to, it would have been the break and retest of this level on lower time frame. My entry would have been somewhere around here with this 3-pin formation, 1, 2, 3. So my entry would have been somewhere here or inside here. So right now the market is in a push phase, so we expect it to keep running down and down. EURUSD, on the other hand, did what we were expecting, where I said I was only going to be a buyer with a break of this zone here. It did not break, and as such, we were still sellers. I did capitalize on one sell from here to here, and I did not capitalize on this one. So right now, the market is currently in a retracement on the lower time frame. This whole level has been broken. 1, 2, that level has been broken. So we want to see some sort of retracement. The only time we become buyers in this market is some sort of break of this minor support and resistance, this minor resistance here, before we be buyers back into the upside. But for now, we are still looking at the bears taking over this market. USDCHF. The market was around here that day where I said it was the concept of the first touch, where we expected a rejection from that level. You can see that we got that rejection, and if you draw your Fibonacci, drawing the Fibonacci like this, you can see that the market got to the 50%, and there was a line here that day, and you can see it's a break and retest of that level. We can see that there is also a break of this level, a retest and a push. So you could have capitalized on the trade inside here after this bullish engulfing, after this reversal candle here on the lower time frame. Right now, if you go on the lower time frame, still the same thing, just the opposite correlation of EURUSD. Will only be sellers with a break of this level back to this side, and maybe back downwards. So I'll only be a seller with a break of this minor area here for a pushback to the downside. If not, I'll be looking to take a buy back into the upside. What else? I've done gold. NZD. Okay, I took NZD JPY sales, but I can't go over that right now. But I went over it with my students. This sell here, the retracements. I got into another sell again yesterday. And currently I'm in the positives. Same thing for this. I got into the sell, I got profit, but I missed this other one. So, but I'm expecting this market to run back down into this level as time goes by. All right. For volatility index, I had a straight line here where I was saying I'll only be a buyer with a break of this lower high. But if there was no break, we were still in a bearish market. And you could see that bearish market it was. I was only going to be a seller with a break of this level. And you can see 1, 2 break, a retest of that level, and there was a sell. Right now, we're still in the bearish side of the market. We're still looking at this market going further downwards. So if you draw a minor, Fibonacci on lower time frame, let's say from here to here, you'd see that the market is currently at the 38.2 region. If you do your analysis on the lower time frame, a strong break of this level on the lower time frame will give you a sell signal, and we can still go back into the selling markets. But if not, a break of this level, we might see the market run into this level for like 300 pips and back up into this level for over 100 pips. What am I saying? For, yeah, more than 8,000 pips actually. So for more than 8,000 pips. So this level is 3.2. This level is 2.7, almost 8,000 pips. So close to around 900 pips. So if we see that break of this level, we might see the market go back up. If we see a break of this level and the market keeps dropping down. So that's all for my catch-up series. Don't forget to like, subscribe, and share. If you have any question, ask. Share this to your friends, your family, your loved ones, your enemies. Also, let them make money from this gold that we are giving out for free. Don't forget to follow us on our social platform at TradersHubNG, at King ALXNDA, at Yusha Mindset, Twitter, Instagram, everywhere. I'll see you guys in the next catch-up series. Take care and bye-bye.